Hey, my name's James Nicholson and welcome to my YouTube channel. I want to talk to you about a new type of mortgage that's becoming more popular. And I've got a lender here that has got a product that could fit you if you just got that uncertainty on what you should be doing at the moment. Should you be fixing for 2 years or 5 years? They're the most common. Well, this product is a 3-year product, and that gives you a good opportunity if your belief is that interest rates are going to fall over the next few years. So do watch this video to the end. I'm going to talk about all about who the lender is and who should take this deal potentially, and much, much more. And if you're new around here and you haven't done it already, do subscribe to the channel over here and hit the bell notification. We've got all the latest property news as and when it happens. We've got 36,000 subscribers now, 4,000 people subscribed just this month. So thanks to everyone that does that. And let's get some more views on this video. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and gets more views on the channel. So thanks to everyone that does that. So we've had interest rates that have been quite volatile over the last few years. And obviously that was down to inflation, wasn't it? So inflation went to record levels, or not record, but we hadn't seen these kind of levels for decades. And we got 11 roughly percent inflation. And since then, it's been persistent. It's been sticky. The Bank of England wants to get it to 2%. We're at 2.5%, and we're trying to move it in a downward moment. But it isn't happening as quick as the Bank of England would like. And because of that, it's giving interest rates a little bit of uncertainty. We've also got uncertainty because of the budget that Labour has done. So Labour's budget hasn't gone down well with businesses. We've got big supermarkets, Tesco's, we've got Marks and Spencer's and Sainsbury's that have laid off between them tens of thousands of people because they're saying it's an impact of the higher national insurance and the higher minimum wage. Now, there's thousands of other companies that are going to do the same, and unemployment in the UK is undeniably ticking up. Consumer confidence is low at the moment as well. We really don't know if we're going to go into a recession. It's shocking or surprising that we haven't been in one recently because things haven't been so great. We've been on the cusp of a recession multiple times, and somehow we didn't actually enter one. But it's hit people hard. Inflation has hit people hard, and that all of that uncertainty is impacting mortgage products. And so because of this, we've got one more problem. We've got the Americans. And so in America, maybe at the time of watching this one will have been resolved. But I watched the news where Donald Trump was talking about the plane crash that happened. And this was on Thursday night. And he was saying on Thursday that they were going to put tariffs on Mexico and Canada at 25%. Now, I'm recording this on Friday, and at this moment right now, it's still not certain if that is going to happen. Now, that isn't great for businesses. Imagine you own a company in America and you import timber to make products and services out of. You've got a problem because you really don't know if your costs are going to be 25% more expensive on Saturday. Now, this uncertainty is not what markets like. And when you get this kind of uncertainty, mortgage rates can tend to increase. And that has happened this month. So in January of 2025, mortgage rates mostly went up. There wasn't really much downward momentum. Even though we're expecting the Bank of England this week to cut rates, the mortgage market has increased. So people are undecided. Should you go for a 5-year deal? Should you go for a 2-year deal? These are the most common deals that you get out there. And the most common deals out of those two are 2-year deals. But a lender called Empowered Mortgages has decided that they're going to give some sort of compromise here and help people that are uncertain. So they're called Empowered, and they're launching a mortgage which is one of the cheapest in the market at the moment. It's 4.7% with fees of £999. Now, the fees are quite high on every lender at the moment. So these are there or thereabouts. This is a good option if you just want to have that certainty. You believe that the market is going to go down. Maybe if we go into a recession, the Bank of England would cut rates sharply in that circumstances. You've got America saying that they want to cut rates, or at least Donald Trump is saying he wants the Federal Reserve to cut rates. So rates could move in a downward trend, but maybe that doesn't happen as quickly as you hope or expect. So this gives you a little bit more predictability without locking yourself in for 5 years, because it would be frustrating if you locked yourself in for 5 years at 4.5% and then in a year mortgage rates are 2%. I can see where people are coming from with that. So Empowered are giving you the option of spreading this over a 3-year period, which is decent. And it's a great option. Now, if you were to borrow £200,000 from these guys, the monthly payments on this would be £1,064 per month, which is quite affordable for a lot of people. Now, the loan to value here is another consideration. So this product is their best rate. They have other deals as well. They're looking at people that have got 60% loan to value. Now, you might watch this and say, well, I haven't got a 40% deposit. That's ridiculous. So this is suitable for you if you're refinancing or remortgaging, which is the majority of the market. There's more people that are remortgaging than buying new products and first-time buyers. So this is a product that could help millions of people in the UK, if not thousands at least, to get a product that gives them some certainty for that short period of time. Now, what do I think is going to happen? I do think rates are going to come down in 2025, but I do think not as quickly as we hoped. Now, the Bank of England has 2 cuts that they can do and still be fairly close to the Federal Reserve. Listening to the Federal Reserve meeting after their decision the other day, it really isn't looking confident there that they're going to cut rates at all in 2025. Donald Trump is saying they must, but they are their own business. They don't have to listen to the president. Donald Trump has said he could fire them, but a lot of people said he can't fire the Federal Reserve. What isn't good is that they're not talking. Donald Trump and Jerome Powell haven't spoken to each other since he's become president. That isn't great for anyone in the world economy. They should be on the same page and at least having conversations about a strategy going forward in order to make things more affordable for Americans. And that is what their job is, basically. So, yeah, I think the Bank of England will cut rates 2 times this year. We've got that ability to do that. But I also think that if we do go into a recession, we're close. We're very, very close on that. If we do finally go into a recession, I do think you could see 3 or 4 cuts in 2025. So do let me know what you think. What do you think on this deal? Would you do a 3-year deal? Do you think that's a good opportunity for you guys? Do comment below, do smash like, do check out all the videos on the channel as well, including this one right here.